Hey everyone, welcome back to Corporate Decoder. Today, Worksport Ltd just filed A8, and I'm seeing some interesting news on their revenue. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company announced some pretty solid revenue and profit growth for their first quarter, and let's dive into what that means. So, Worksport Ltd released some news on May 13th, and it is all about their first quarter results. They are saying their revenue jumped up by 48% year over year, and their gross profit shot up by a massive 116%. That is a huge jump in profit compared to just revenue, which is exactly what you want to see. It means they're not just selling more stuff, they're making more money on each sale, and that is always a good sign for a company's health. This report is filed by Worksport Ltd, which is based in Nevada. They are in the auto parts industry and have a market cap of around $10 million with about 116 employees. Looking at recent headlines, one mentioned they're building up inventory to the tune of $11.6 million and aiming to be cash flow positive in 2026. That is a major goal for any business, especially with their current market cap. It is good to see they are listed on the Nasdaq under the ticker WKSP. This means they have met certain requirements to trade on a major stock exchange, which gives them access to a wider pool of investors. The core of this filing is the press release mentioned earlier, which is attached as an exhibit. This means they are sharing important company news with everyone at the same time, which is what Regulation FD is all about. They don't want any unfair advantages for certain investors getting information before others. Number 99.1 is the actual press release. It highlights the Q1 revenue increase of 48% and the gross profit increase of 116% year over year. This is the main event of this filing and really what we are here to dissect. Now, let's consider what these numbers mean in the bigger picture. A 116% increase in gross profit with a 48% increase in revenue indicates that Worksport has become much more efficient in its operations. They are either producing their goods at a lower cost, or they have been able to increase their prices without significantly impacting sales volume. This is a very positive development. We also see from external context that Worksport Ltd has a market capitalization of $10 million. With revenue growth like this, it signals that the company is moving in the right direction and potentially on its way to becoming a more substantial player in its market. The goal of being cash flow positive in 2026 is also a critical milestone they are aiming for. Achieving this would mean the company is generating enough cash to cover its operating expenses and investments, which is a sign of financial stability. While this news is positive, it is always good to look at the broader financial health. Institutional investors like Armistice Capital, LLC hold a significant portion of shares, which can sometimes indicate confidence in the company's future. However, we also know from other headlines that they reported a Q1 loss and missed revenue estimates on Yahoo Finance Canada. This creates a bit of a mixed picture. The press release touts strong growth, but another report highlights a loss. It is important for investors to understand why there is this discrepancy. It could be due to one-time expenses impacting net income, or perhaps different reporting methodologies. When a company shows such strong gross profit growth alongside a reported net loss, it is crucial to dig deeper. Are there high operating expenses, research and development costs, or significant interest payments that are eating into the profits? Or is this a temporary situation related to the inventory buildup of $11.6 million they are undertaking? Building inventory requires a lot of cash up front, and while it is a strategic move for future sales, it can impact short-term profitability and cash flow. The risk I am watching is the discrepancy between the reported growth in the press release and the Q1 loss mentioned in other headlines. It is important to see if the company can translate this gross profit improvement into actual net profit and positive cash flow, especially as they build up inventory. What I am actually looking for is a clear path to profitability and sustained revenue growth. Not just in gross profit, but also at the net income level. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.